Hey guys, what's going on? Jamil, the investor, a part of Investors Trades. And in this video today, I'm going to be taking time to break down 15 qualities that make a terrible, bad trader. Yes. Now, before anything, I'm pretty sure that there's someone on the other side of the screen probably asking, why in the hell do I need to listen to a video that talks about all of the things that make you a bad trader? And for good cause, you have every right to ask that. But I want you to think about this for a second. How often have we been told that in order for us to have something, in order for us to become something, you must do something, right? So in this case, in order for you to be a good trader, you got to be consistent. You got to not have fear. You got to not have greed. You have to be able to hit A+ setups. But that doesn't talk about how to do those things. It just sounds like a lot of smaller destinations in order for you to get to the big destination. And often at times, in my experience, I realize when you focus so much and you have an overload of smaller destinations, it puts you in a state of paralysis where you don't know how to do anything. And now you find yourself procrastinating and not getting to where it is that you want to be. And so one thing that I took from a man named Alex Hormozi, if you do not know who he is, serial entrepreneur, 8-9-figure earner, completely great when it comes to personal development and motivation. He talks about instead of focusing so much on the smaller results, right? Think about all the qualities that the person you want to become most has and simply emulate those qualities. And one thing that you'll realize is you will end up becoming the very same person or the very same thing that you want to become. And so in this video, it's absolutely no different. If you're able to take some time to understand all of the qualities that make a good trader and you simply just do those qualities, you will become a great trader. And so what this video serves as is that if you're able to understand the qualities that make a bad trader and all of the things that bad traders do, and you are just able to do the polar opposite of those, then you will get the polar opposite result, which is becoming a good, profitable trader. So with that being said, let's get straight into the meat and potatoes. What is the first quality of a bad trader? Make sure that you blindly trade and you never plan. All the good traders that I know plan the night of. Myself included. They review the morning of, myself included. And when it gets down to the trade that they're planning to make, all they simply do is just wait and click the button when their numbers hit, and they simply just let the trade play out. As a bad trader, if you want to have failure, if you want to keep raw dogging the markets, if you want to keep doing all of those things and having just damn near heart palpitations as you trade and watch the screen do nothing, then make sure that you don't plan. But if you want to be able to have a less stressful day and one that is a lot more peaceful, then make sure that you plan your trade out because it has its benefits to it. Like being able to have the trading psychology, knowing how much risk and being okay with it, and then not being able to get so worked up when a price moves against your direction and doesn't get fully to the result. Number 2, do not journal your trades. Now, this is probably one that I will say has been very beneficial for me in my trading journey at this current moment in time, because I remember a time specifically last year where I kept making trades, but I did not journal what my progress was on that given day. And oftentimes I did not realize that I was doing myself a disservice by not journaling, because by not doing so, I was not able to understand what it is that I needed to correct the day of. And so the importance behind journaling your trades is that it allows for your mind to build a muscle. It builds repetition. It builds patterns so that way you're able to recognize the next piece of price action if the pattern is similar. You're able to understand what the sweep and the stop hunt is, and it allows you to be able to react and, more importantly, refine what it is that you already have from the previous instance so that way you don't get got by it again. Number 3. Do not review or backtest, right? Now, again, this is a very important quality because as a bad trader, a lot of traders think that backtesting is not helpful, which in a live session, it isn't really helpful. Regardless of how it is that you feel about backtesting or anything, one thing that I will say about it is that backtesting will never be beneficial to you in the way that you think when it comes to a live session. You can review all the things that you want. You can go back and forth. But when it comes to waiting and sitting at the screen, hoping for your play or your setup to play out, that relies on patience. That has nothing to do with backtesting. However, what backtesting can and will do, it will allow you to refine your strategy, review what your strategy does, review how you react to it, and more importantly, build trust when it comes to being prepared for the live session. This is why it's important to backtest. Not that it's beneficial in the live session, but more importantly, it allows you to test whatever system that you have, whatever strategy that you have, to make sure that it's viable and workable enough for you to win more than you lose. And this brings us to number 4. Blame the strategy and never yourself. Now, personally, me, I think that this is a pretty bad quality just as a person. I'm very big on self-accountability, but one thing that the market has taught me and will continue to teach everyone is that if you do not have accountability in the markets, if you do not take responsibility in the markets, whatever inconsistencies you feel like that's going on in your life, the markets will reveal it right back to you like a mirror. And this is one of the biggest reasons why majority of people who try to trade do not become successful long term, because the markets is simply a mirror right back at yourself. Only 1% of traders are successful in the entire industry. I want you to think about that. But why are they successful? It's because on their way to success, they had a moment with themselves, took a look at all of the inconsistencies in their own life, and realized what it is that they needed to do. You are unable to do that if you do not take accountability and responsibility for your actions and your performance when it comes to whatever strategy that you're using. Because oftentimes, and I see this so many times, but just as an example, a lot of people out here back on ICT. Now, I'm not an ICT trader or anything. I have my own system. It's traditionally from support and resistance. But too many times do I see people where they'll use ICT and it doesn't work because they don't understand it. And then all of a sudden now they're claiming ICT is a damn scam and all of this. And it's not the fact that ICT is a scam. It's not the fact that a silver bullet or an inverted fair value gap is a scam. And it's not even the strategy that's not working. 9 times out of 10 is probably you just not working it. And the sooner that you can accept that, and the sooner it is that you can actually fix it. Number 5, get every single piece of profit out of the markets every single day. Now, once again, this is something that goes along the lines of greed, and this is the reason why it is a quality for a bad trader. Because good traders simply get in what it is that they need and get out of the damn markets. That's it. They do not have any hesitations. They care less about the money. They just care about either meeting their quota that they have set or being able to get whatever levels, whatever profits that their strategy allows them to get. Number 6 quality that makes a bad trader: hope your trades work out. Now, the reason why this is a very bad quality is because, again, you're utilizing something called hopium. If you don't know what hopium is, it's literally what it sounds like, having hope that something is going to work out. But hope literally derives from lack of planning, lack of preparation, lack of risk assessment, lack of trading psychology, all the things that inherently hinder you from having the kind of success that you want as a trader. In order for you to not have hope and simply to be detached from the outcome of a trade, you must plan your trade. You must review your trade. You must be okay with risking however much. And if you have to dumb down, if you have to go to a micro or anything like that, then that's what it is that you have to do in order for you to be comfortable with the trade. Because the biggest thing about a good trader is that a good trader will have confidence in their trade but disconnect from the outcome itself. Number 7, trade excessively. Again, don't get me wrong, you have some scalpers out there that probably, I've seen a number of scalpers before, maybe trade 4 or 5 times and just scalping the candles and stuff. And there are a number of people who have success with that. But if we're talking maybe 10, 15, 20 times a day, you're probably just doing it wrong. And this is one thing that I had to realize when it came to my own system. The moment that I realized every single day that my winning outcome presents itself 1 to 3 times, and 3 is on a blue moon. You might get 2. But and the reason why we say 2 is because you have, during the New York session, you have the AM session and you have the PM session. If you out of one of those 2 or maybe 3 times that you are not able to take advantage and reap of that outcome, then it's probably best that you're either missing something, you need to go back and identify it, and then just alter it. But if you are trading more excessively and more than probably 10 times a damn day, you're probably shooting yourself in the foot. Number 8, always be in a hurry to be in and out of the markets. Again, this is more of a rookie mistake, but this is also a quality of a bad trader as well. So many people, whether you be a beginner or whether you just be very impatient, okay? This is what pays you in this game, but more importantly, many people get into this industry with the concept that you are going to be able to make hundreds of thousands of dollars by simply just being in the markets 5, 10, 15, 20, maybe 30 minutes, and that's it. Now, personally, me, I can count on my one hand how many times I've been in and out of the markets this year, being able to make 4 figures in less than 30 minutes. And that's only 2 times. I think on any given day, we're probably looking at anywhere between 45 minutes to maybe an hour and a half, maybe 2 hours between when we bought in and when we exit the position. And so as a good trader, it's best for you to understand that and give yourself, number 1, patience, because patience is what pays you in this game. But more importantly, give yourself a time frame minimum between 3 to 5 hours. And better yet, take it even further with understanding and being okay with having a full 8-hour day of doing absolutely nothing but waiting, looking at a screen, waiting for your outcome to present itself, and be okay with the possibility that it does not complete. You are stuck waiting again, and you might leave the day not trading anything at all and be perfectly fine with it. Because not every single day causes for you to trade. But more importantly, trading is a process that takes time. So give yourself time. And this gets us into number 9, and that's trade every single day. Once again, this goes back similarly to number 7, but more over that, this entire week, I think we're at break even. So last week we were up $4,000 on the week to start October. This week right now, we are only at break even. Monday, we missed our process because of the fact that we undercompensated in terms of our entry. Tuesday, we had an L, which was I think $165. Wednesday, yesterday, we did not have our process complete, so we took no trades. Today, we ended up at break even at 170, so now we're back at the same. We have not lost any money. But the whole bottom line is, right, from our process, we've only traded 3 out of the 4 times this week. Your trading profile, whatever it is that you trade off of, whatever winning setup that you go by or whatever model is not going to present itself every single day, and you should be okay with not trading on that day if that is the case. And again, this gets us into number 10, strategy, hop, strategy, hop, strategy, hop. Again, top quality that makes a bad trader. Why? Because oftentimes do I hear when someone goes through this losing streak and they're unable to understand why it is that they're going through it, what it is that they'll do. Instead of taking accountability, they will hop from one strategy to another. They'll say that this doesn't work. They'll say that's a scam. They'll say this is a scam. They don't give themselves time in order to go through the process of the learning curve. And so I want you to imagine this is you right here where my finger is. You learn a strategy and it starts giving you success. And instead of you being able to refine and go back up, well, because of the fact that you are hitting a loss, all you simply do now is quit. And now you're back at 0, and then now you're picking it up, and then now you keep doing the same thing. And instead of you going up, because of the fact that you're not giving yourself time in order for you to learn, in order for you to refine, you keep getting back stuck in the learning curve cycle where you don't learn anything, you do not have any level of results. The best thing that you can do as a good trader is to stick with one strategy, refine it, build it, make it your own. Do whatever it is that you have to do in order for it to be comfortable and suitable for you on a daily basis, and go for it. Number 11, win your money back in revenge trade. Again, this is a no-brainer. I believe I had one of these moments earlier this year where I just had a terrible trading day. I think I was down like $800 or so, and I fully understood what the problem was, and I saw what I thought was going to be my break-even day or my break-even outcome or so. And so I told myself, and I literally said this, oh yeah, we about to get it back in blood. And sure enough, not only did we not get it back in blood, we gave more money to the markets. And so it ended up being a $800 day to the downside, or losing $800, ended up being $1,700 lost to the day. And so the biggest thing that you want to know Bad traders do not know how to take a loss. Bad traders revenge trade. Bad traders crash out once they take a big loss. Bad traders go on full tilt, not by simply just taking L's from following the rules, but going outside of their rules and crashing out and to try and win back what it is that they already lost. Whereas good traders are okay with taking the loss because they know and they understand that they're able to win more than they lose. But more importantly, they understand that one loss will not mess it up for the next day. Number 12, make sure as a bad trader, you over leverage. Once again, when it comes to good traders simply measure whatever kind of risk that they're willing to put up in order to figure out or determine whatever outcome it is that they see. But oftentimes bad traders will focus more on the outcome, however much money that they want to win when it comes to the point that now when it actually comes to the process of waiting through to see if it plays out or if it tries to go for the stop punt, you get cold feet, you either stop immediately and don't let the trade play out and you're down already, or reversing and then now you're feeling 10 times worse because you might have blown too much of an account, you might have went on full tilt trying to make this amount of money rather than regulating whatever risk that you have. Number 13, use callouts in other people's trades. Again, disclaimer real quick. We have our own community, we live trade, we have our own alerts. There's nothing wrong with it. However, what does make this a terrible quality as a bad trader, or a phenomenal quality as a bad trader actually, is the fact that bad traders will utilize callouts, will utilize other people's trades to help them or give them belief that they can get to wherever it is that that trader, that person dishing the callouts is going to get to them. And so the problem behind this is, long story short, is that by not taking full-on responsibility for your current progress, whatever kind of goals that you want, you put the power in the hands of someone else to get you there. And that simply derives from depending on the community itself, not being able to learn. And so as a good trader, traders will probably start off, and again, this doesn't matter if you're a beginner or experienced, but good traders, right, will, if you're using somebody's callouts, if you're trying to learn from someone, they will take that trade, reverse engineer, whether or not they take the trade or not, but they will reverse engineer that trade to understand why the person made the call out, why the person took it, what is it that they're looking for, what is it that they're seeing, what explains why this outcome was the way that it was that went in their favor, how can I get to this? Because again, as always, the good old saying still stands, give a man fish, he'll eat for a day, teach a man how to fish, he'll eat for a lifetime. Number 14, blame the market and the economy. Bad traders do this all the time and it never escapes them. Why? Because they're so fixated on, because of the fact that they're economic events, they're volatile for price action, whatever, okay? Be FOMC, whether it be non-farm payroll, PPI data, I always inform many traders, many students of mine, do not trade news. We literally do not trade news. I could give a rat's ass about news. Okay, I do not care for it. I do not want to be in the midst of it. Why? Because I remember earlier in my trading career when I used to trade earnings, burned me because of the fact that at times when I got it right, I made big. But at most other times, which was majority of the time, when I got it wrong, I lost big. And so the best thing that you can do as a good trader is to stay clear of the economic events and then just let your process play out when your process should play out. And then last but not least, and this is the top of my list simply because of the fact that we did this a lot and we continue to do this just in a different way. But number 15 quality as a bad trader, predict the markets. Now, the reason why I say that this is number one for us is because when it came to us, we got a lot of attention on social media. We made a following from being able to successfully predict the markets on a day-to-day basis. We have been able to predict gold going to where it is right now, which is $4,000 at $19.46 an ounce. We were able to predict Oklo Energy. We were able to predict Ion Cube, BWX. We were able to predict a lot. And predictions are good when it comes to understanding and projections when it comes to investing. The reason why it is a terrible quality to have as a trader is because predictions do not do anything for you but hinder you because of the fact that predictions do not make you money when it comes to trading. Predictions create projections. Probability creates profitability when it comes to trading. And so there have been too many times, myself included, where you may think that markets are going to go at a certain moment in time. And you decide to get in because you're super confident about where the markets are potentially going because you know that it's going to reverse. And you decide to get in early. You set your stop loss, you set your profit margin, and then you realize it continues to go back up. And one thing that you don't realize is that your trading psychology is being worked at the time and moment when you enter into that trade, regardless if you predict the outcome or not. And so predicting an outcome, getting in before you actually need to at the moment when you need to be in that play goes out of the window. You start to worry about a lot more things. You start to lose confidence in the trade itself simply because of the fact that you thought predicting was going to be a lot more viable for you. There have been so many times where you can predict something and you still not be able to have enough confidence in the trade in order for it to play out. Why do we know this? Because this has happened to us plenty of times in the past. And so the best thing that you can do as a good trader is to not have predictions, disconnect from it, but allow probability to work in your favor so that way it can lead you to the profitability that you want. So again, these are all the 15 qualities that make a bad trader. And then what it is that we're going to do now is actually flip them so that way you know 15 qualities that will make you a good trader. The number one quality as a bad trader is blindly trade, never plan. Number 2, do not journal your trades. 3, do not review or backtest your trades. 4, blame the strategy and never yourself. 5, get every single piece of profit in the markets. 6, hope that your trades work out. 7, trade excessively. 8, be in a hurry to be in and out of the markets every day. 9, trade every day. 10, strategy hop. 11, win your money back in revenge trade. 12, overleverage. 13, use callouts, depend on other people's trades. 14, blame the market and the economy. 15, predict the markets. Those are your 15 qualities that make a bad trader. And so now, if you would like to become a good trader, make sure that you, number 1, plan your trade always. Number 2, journal and review your trades. 3, back test your trades and your strategy to see that it works. 4, be accountable on your performance and the strategy that you're using. Number 5, shoot for what your system allows you to get out of the markets. Number 6, have confidence in your trade, disconnect from the outcome. 7, trade only when viable. 8, have patience in the markets. 9, trade only when necessary and what fits your system on a day-to-day basis. Number 10, stick to one strategy, make it your own, refine it so that way you're able to utilize it. Number 11, be okay with taking a loss. 12, risk only what you're willing to lose. 13, learn from callouts, don't depend on them. 14, disconnect from external factors and events, steer away from volatile events. And then 15, last one that makes a good trader, do not predict, measure probability so it can lead you to the profitability. So that's everything for this video, guys. Again, if you like this, be sure, like, comment, subscribe, give me your thoughts. And as always, be sure to tune in with our live training every Tuesday and Thursday into the month of October. And as always, I will definitely catch you guys with more trading content in the next one. Take care.